they have extremely high interest rates. The interest rate today, and this is just from various reports that I've seen on creditcard.com and several bank rating and a whole bunch of other sites. The current credit card rate today, store retail credit card, standard rate is like 27%. It's like 26.72, something like that. So basically 27% for store retail credit cards. Not only that, but some cards have interest rates as high as 30%. People's voice. Welcome back. Welcome back. This is the People's Voice. I am Trey Evans, and I am the People's Voice. Thank you again for checking us out this week. As always, it's greatly appreciated. As I always ask in the beginning of the podcast, if you're enjoying the podcast, please feel free to subscribe to the podcast if you haven't done so already. Also, feel free to share the information with friends, loved ones, business associates, anybody. And then also go ahead and on YouTube, when you do check out the videos, go ahead and subscribe and also hit the like button. It is greatly appreciated. I mean, and for more than anything, it lets us know that what we're doing is enjoyable, and then we can create more content that is in that realm, and hopefully you'll enjoy that as well. So, but as always, I appreciate everyone who has been listening and subscribing and sharing the information. Thank you. So today, I want to talk about store credit cards, or store retail, or retail credit cards, however you want to describe them. As the season of overspending is upon us, I thought today would be a good time to kind of give some ins and outs about store credit cards. Want to talk specifically about a little bit about what it is actually, because some people may not know, even though I doubt that. But just in case, as always, I like to give a nice definition of what things are. But also want to talk about some of the features of store credit cards, and then of course some of the challenges that come with store credit cards, and then of course give some recommendations on how to use them or how to effectively not use them, and some suggestions on if things get a little out of whack in terms of payments, how you can manage that. So today I want to talk about store credit cards because, like I said, it is the season of overspending, and that usually starts with credit cards. Now, store credit cards have many advantages and disadvantages, right? Just like anything else. One of the, one of the concerns in terms of, and this is just opinion at this point, is that getting a store credit card is much more easier than getting a standard credit card, right? Your Visa, Master, American Express, right? They still do credit history checks and things of that nature, but they're not as stringent in their decision making of who can get a credit card, right? Because again, as I just said earlier, the purpose of the credit card is to get you to spend more money. So in terms of getting approval, a lot of people get approved for them, right? Because they want you to spend more money. So I guess that would be the first, concern about credit cards, is that store or retail credit cards. The first thing is that it's very easy to get into a store retail credit card because the barrier of entry, or the requirement to be approved, is much lower than for your standard credit card. So that's number one. The second thing about store credit cards that many people may not know is that they have extremely high interest rates. The interest rate today, and this is just from various reports that I've seen on creditcard.com and several bank rating and a whole bunch of other sites. The current credit card rate today, store retail credit card, standard rate is like 27%. It's like 26.72, something like that. So basically 27% for store retail credit cards. Not only that, but some cards have interest rates as high as 30%. So now you go into a store and you decide that you're going to get a credit card because there's something that you want to purchase. 26% in terms of an interest rate, 27% is mind blowing in terms of an interest rate. But again, these cards are designed for two reasons. Number one, they want you to spend more. Then number two, the company that's issuing them or the store has the ability to then charge you interest. So they make even more money on your original purchase. And then number three, another reason why a lot of these stores do that is because they don't have to pay a transaction fee. I'm not going to get too much into that, but basically when you swipe your Visa, Master, American Express at whatever store that you're at, the store pays a transaction fee. And so a way to kind of eliminate that is like, hey, if you're going to be in our store, I'll just issue a credit card. I don't have to pay a transaction fee to a third party. And then, I can, hold on to all of that revenue. But digressing, and let me move on. So one of the second things is that store retail cards have very high interest rates. And so you want to take that into consideration before you are signing up for a credit card at a store. Now, keep in mind, another thing is that the store, so what happens is you walk into a store, you're going to buy whatever store it is, and I'm not naming any stores because I don't want to, point out any store, but you walk into a store, you decide you're going to buy an item. There's a cashier, a service person that's going to say, hey, if you sign up today, you can get 10% off on that purchase if you sign up with our credit card. Now, that person is telling you this because, number one, they get a commission, which some people may not know, for signing you up, right? So they actually get an additional amount of money based on the number of applications that they have people sign up for. And then again, number two, like I said, it's a bonus to the store. But when you're thinking about it, right, if you are going to buy $100 worth of goods from a store and they say if you sign up today, you'll get 10% off this purchase. Is $10 off really worth paying 27%, possibly 30% in interest on that $100 purchase? Right? Because sometimes you got to think about that. Like, is this $100 this $10 that I'm going to send worth me spending possibly another $20 in interest over however long, which they make their money back off that $10 that they just gave you. So keep that in mind, that a lot of times, I know when you're standing in front of the cashier, they may seem, like they're trying to help you out, but they're actually incentivized to offer you those credit applications for the in-store credit. And again, it is a benefit to the store as well to encourage you to spend more. So, but getting back, so the first two things that I covered, number one, store credit cards are very easy or much easier to obtain than your standard credit card, which again can lead to problems because you can be approved for multiple store credit cards, which can cause great headaches. Number two, high interest rates. Typically, As I'm not typically, but as of today, the standard store retail credit card is almost 27%. Some are as high as 30% in terms of annual interest rate on those cards, and annual percentage rate. So keep that in mind. Another thing that number three, and I like to just break it down into categories. The third thing is when you sign up for these credit cards, this is what they call a hard pull on your credit. And so let me stop here and say I am not a financial advisor. This information is for entertainment and consumption purposes only. Please speak to your financial advisor or your credit advisor regarding any credit or financial advice. Thank you. But to continue, so this is what they call a hard pull on your credit. And what happens is the credit card, the retail store does a hard pull, meaning that they do an inquiry on your credit that then affects your credit score, right? And many people may know, for those who don't, each time that you have an inquiry on your credit, this is charging you or reducing your credit score. And the more that you have, the lower your score can be. Why do I say that? Many people just don't sign up for one store credit card. Especially, again, we're in the season of overspending where people will go in and walk into a store and be like, hey, I can get a TV here. They're going to give me a credit card. I can buy some clothes here. They're going to give me a credit card. I can go over here and buy a phone. They're going to give me a credit card. Now you've racked up 3 credit cards. Those are hard pulls on your credit. Credit score drops significantly. Keep that in mind. That's number 3. Number 4, the fourth reason is that many of these credit cards usually come with low balances. Now, why is that an issue? So, for example, you'll be issued a credit card for $500 and you'll be at the store. They'll say, yep, you got approved. Your credit limit is $500. You go and buy a TV for $480. So now you've been issued a $500 credit limit. The TV was $480. You've used pretty much 90% of your credit limit. Why does that matter? Well, when it gets reported to the credit agencies, what often happens is that there's a thing called credit utilization. Again, I'm not a financial advisor. I'm just talking from personal experience. This is for entertainment and consumption purposes only. There's a thing called credit utilization. And the higher your credit utilization is, that also affects your credit score. So if you have, for instance, 4 credit cards with $500 of credit limit on each of them, that's $1,500, and you've already racked up $1,450 in credit from 3 stores on three credit card, 3 retail or 3 store credit cards. Well, guess what? Now your credit utilization is basically 90%, and that's how it'll be reported. And I'm using very simple numbers. I know for the credit gurus out there, you're going to, well, there's other factors. I'm keeping it simple because I like to keep it simple. That affects your credit score as well. So now you got your 3 inquiries, right? Your hard pulls. Then you got 3 credit cards with high credit utilization. Your credit score gets lower and lower. Why is this important? Because your credit score is important because when you do need to use credit, you want to get what they call preferable rates. And it's tough to get preferable rates when you have low credit scores. I'm going to stop there. I am not a financial advisor. Just advice. I mean, not advice, just information. So that's the 4th reason. Many of these store retail cards provide low credit balances, and many times people max out those credit cards, which then is reported onto your credit report as high credit utilization. Keep that in mind. the last thing that I want to touch on is the credit cards that have the preferred rate. And this is a very big one. So, I mean, excuse me, not preferred, deferred rate. So what will happen is many times is you'll have a credit card that says, hey, you buy today, no interest, no payments for 24 months. And you just jump at it. You want that washing machine and dryer. It's calling you. There's a deferred interest rate. Matter of fact, let me play this. Let me play this clip from a news report from regarding retail credit cards. This is from a CBS affiliate in Phoenix. So let me play this as this gentleman is talking about this very issue regarding deferred rate, and then we'll follow back up and go from there. So
that's a big potential gotcha. A lot of store cards will offer, let's say, no interest for 12 months. But if the fine print says deferred interest, that means if you don't pay in full, by the time the clock runs out, they can charge you retroactively for all of the interest that would have accumulated. And that can be really significant.
And that is another challenge that many people are not aware of, right? That deferred interest is huge because what ends up happening is not only will you have to pay the interest that, let's say it was $1,000 purchase, right? And you see this a lot from big ticket items. So you bought a washer and dryer, it's now $1,000. You took out the credit card that said 24 months, no interest, no credit. I mean, no payments, no interest. You've now taken this credit card out, and for 24 months, you pay minimum payments, right? After 24 months, and minimum payments could be $50 a month, right? So you pay, let's say, $600 the first year, $600 the second year. Well, actually, let me use a different example. So it's $2,000, right? You pay $600 the first year, $600 the second year, right? That's $1,200. So now you have $800 left on your balance. You're thinking, I'm going to pay that off. I know the interest is about to hit, but I'm going to, continue paying. I'll probably pay this off, here in the next month or so. What ends up happening is that credit is then not only do you get hit with the interest that on the balance that you have remaining, you now also get hit with the interest for the entire purchase. So now that $2,000 purchase, that interest is what they call deferred. So they deferred that interest on the $2,000, not on the $800 that you now owe. And what ends up happening is that balloon payment hits, and now your balance goes back up, and you have a difficult time paying that off. So very important to be aware of these store credit cards when you sign up. Always want to read the fine print. Don't feel pressured by the salesperson or by the cashier that is offering you to sign up today. Take a look at that. Yeah, if it's something that you feel that you're going to be able to pay off before the interest hits, then that's fine. But many times this does not occur, which causes the issue with store credit cards. So we ran through, all of the warnings, if you will. Let's talk about some things that you can do to avoid signing up for a store credit card. And I'm getting this from creditkarma.com. Stick to your budget, pay your balance in full, set a payment reminder, and then read the fine print. Now, you do all of those things, right? And all of the things that I just discussed, there are still people that are going to sign up for store retail cards, and I'm not judging you, right? You do what is best for you. What happens when you get into a situation when you have all of these credit cards? Maybe you lose a job, maybe you just don't have the enough income coming in to be able to settle some of these cards. Now you're getting hit with late fees and double interest and things. With high interest and things of that nature. You can call some of these companies and work out a a negotiation to lower the credit, to lower the interest. I'm not saying that's for every case. And again, I'm not a financial advisor. So, but in the event that you get into a situation where you've stacked up these credit cards and the payments are really beating you in, you might want to pick up the phone and explain your situation to see if you can get these interest rates reduced. Now, I'm not saying that they're going to eliminate your they're not going to eliminate your balance, but if you can go from paying 27% to maybe 14%, it makes a huge difference in terms of being able to pay off those credit cards in a timely fashion, so it's not ruining your credit history. But that's what I wanted to talk about today. Like I said, I know we're in the season where everybody's going to, not everybody, but a lot of people are going to overspend. And I want you to be aware about those retail credit cards. Take your time. If you set a budget, it's so important. I'm not going to review it again, but be mindful before you walk into those stores about what it is that you're trying to accomplish, how much you want to spend, and then read before you sign up for those credit cards. So that is my time for today. I do hope that this information was helpful and enlightening. As always, you can reach me on any of the socials. You can reach me at I am Trey Evans on YouTube, Facebook, Twitter, Instagram. So, as always, dreams are not just for sleeping. Please wake up and live your dreams. My name is Trey Evans, the people's voice. Tell somebody about the dream. Salute.